We saw a huge flight out of the U.S. dollar into other.
We are finally putting America first.
What the heck is going on? Why is Trump hitting his closest allies with tariffs? Why does he no longer care about crashing the stock market?
Stocks are down, but more interestingly, the dollar is also down.
Over $5 trillion in market value vanished from the US financial system. The US dollar, once the symbol of global stability, plunged, losing 10% of its value since the start of the year. US treasuries, long regarded as the world's ultimate safe haven, were dumped at record pace. And the one thing America could always rely on, global trust, is now cracking wide open. What happened? It began with what looked like just another trade maneuver, a sweeping wave of tariffs branded by President Trump as Liberation Day. But this move would go far beyond trade. It triggered a chain reaction that shook the very core of the global financial system, the dollar, US bonds, and America's dominance as the world's economic anchor. So the real question is, if the world no longer sees the US dollar as a safe haven, can America still lead the global economy? The signs weren't subtle, they were seismic. The yield on the 10-year US Treasury, often called the most important interest rate in the world, surged from under 4% to 4.5%. The 30-year bond, a cornerstone of long-term global finance, saw its sharpest weekly move since 1982. And the US dollar? It had its worst week in 3 years, falling against every major currency in the G10. This wasn't a normal correction. It was a vote of no confidence in America's financial leadership. For decades, the United States enjoyed what economists called an exorbitant privilege. Because the dollar was the world's reserve currency, America could borrow cheaply. It could spend freely, and it could lead confidently, even with massive deficits. But now that privilege is under threat, and the reason is clear. President Trump isn't just waging a trade war, he's challenging the foundation of the global financial system itself. And those rules are changing fast. Inside Trump's inner circle, the idea now driving policy is known as the Mar-a-Lago Accord. It's a plan to deliberately weaken the US dollar, to penalize foreign countries for holding too much US debt, and even to impose user fees on nations that use the dollar as their reserve currency. It's not just aggressive, it's unprecedented. And global markets are reacting. Foreign investors, including major holders like Japan and China, are pulling out of US treasuries. Investment funds are shifting to safer alternatives like German bonds. Economists are warning that we may be witnessing the early stages of de-dollarization. The dollar's symbolic strength is eroding, not just as a currency, but as a cornerstone of global financial order. And in the eyes of many around the world, the United States is no longer the anchor. It's becoming the risk. The world isn't standing still. It's adapting, and in some cases, preparing to move on without the United States. In Europe, financial leaders are openly discussing an expanded role for the euro as a reserve currency. Their pitch? Legal stability, predictable institutions, a rules-based order. José Luis Escrivá, a European central bank official, put it plainly. "We can offer a very large economic area and a solid currency," he said. One built not on volatility, but on trust. In Asia, China is responding in silence, but with strategy. Beijing is offloading US debt, investing in self-reliance, and expanding its digital yuan infrastructure. It hasn't declared a new currency conflict. It doesn't have to. It just needs to wait and watch the dollar stumble on its own. Even among traditional US allies, the mood is shifting. Foreign central banks are asking questions they never asked before. Will America impose capital controls? Will the Fed remain independent? Is the US financial system becoming a political weapon? These aren't abstract concerns, they're urgent ones. Because in today's world, it's not just about interest rates, it's about confidence. Mark Carney, former Bank of England governor and now Canadian Prime Minister, warned of this back in 2019. He said the global dollar system wasn't just fragile, it was vulnerable to a single president's whim. And today, that vulnerability is no longer theoretical. It's real. It's happening. Nations that once depended on US leadership are now hedging their bets. Some are buying more gold, others are signing bilateral trade deals in non-dollar currencies. And quietly, they're building alternatives. Just in case. This isn't an overnight collapse, it's a slow erosion. But make no mistake, the erosion has begun. The dollar is still the world's dominant currency. But for the first time in a generation, that dominance feels negotiable. America built the financial world we live in. The dollar sits at the center of that world, not just because it's strong, but because it's trusted. For over 80 years, countries have held US dollars not out of obligation, but out of choice. They believed in the rule of law. They believed in institutional consistency. They believed that in moments of chaos, America would remain a stabilizing force. That belief is now under strain. By weaponizing tariffs, undermining the Fed's independence, and threatening the foundations of dollar-based trade, the Trump administration isn't just changing policy, it's changing the perception of what America stands for. And perception matters, because when credibility erodes, capital flees. And when the world begins to question the safety of US assets, everything becomes more expensive, from borrowing money to defending global influence. Here lies the contradiction. Trump wants to restore US manufacturing strength. He wants to revive industries lost to globalization. He believes a weaker dollar will bring jobs back and reduce trade deficits. But the cost of weakening the dollar's reserve status could far outweigh any gain. America issues the safest financial assets in the world. It enjoys lower interest rates because the world competes to hold its debt. That safety premium allows Washington to spend, borrow, and project power more freely than any other country. Undermining that system, even slightly, could lead to structural damage that no tariff can fix. And perhaps most dangerous of all, this strategy reveals a deeper shift from leadership to leverage, from trust to coercion, from global anchor to global disruptor. The short-term political win might feel satisfying, but the long-term economic cost could be historic. The idea behind the so-called Mar-a-Lago Accord is rooted in one central belief. It was inspired by the 1985 Plaza Accord and now drives the Trump administration's economic agenda. That the United States must willingly abandon its dominant role in the global monetary system in order to revive its domestic manufacturing sector. According to this logic, a strong dollar makes US goods more expensive overseas. It encourages imports, it fuels trade deficits, and ultimately, it results in the loss of American industrial jobs. So the solution, they argue, is deliberate depreciation. Intentionally weaken the dollar, even if that means disrupting global markets and unsettling allies. But here's what they're missing. It is precisely the dollar's role as the world's reserve currency that gives the United States its most powerful economic advantage. It allows America to borrow at lower interest rates than any other country. It enables the US to run persistent deficits without facing the usual penalties that other nations suffer. US treasuries have long anchored the global economy, trusted in every crisis. If the US undermines that status, the consequences go far beyond trade or tariffs. It wouldn't just destabilize exports and imports, it would jeopardize the very systems that underpin America's strength, the ability to finance its debt, the credibility of its financial institutions, the independence of its military budget, and its unmatched power to project global influence without firing a shot. In seeking to fix a perceived problem in manufacturing, Trump's strategy risks dismantling the very financial ecosystem that sustains American supremacy. This is not just economic policy. It is a geopolitical gamble, and it may prove to be one of the costliest miscalculations in modern US history. As global confidence in the United States begins to erode, the rest of the world is quietly preparing for a different future. In Europe, the EU has started building a reserve infrastructure centered around the euro. They see an opportunity to offer what the US is starting to lose: stability, legal reliability, and long-term predictability. The euro may not replace the dollar overnight, but it's becoming a serious alternative for countries seeking insulation from Washington's volatility. Meanwhile, China is moving strategically, but silently. It is strengthening its domestic economy, boosting yuan-based trade agreements, and expanding digital payment systems, like the ECNY. Beijing isn't challenging the dollar head-on. It's simply waiting for America to weaken itself, ready to fill the void in Asia when the time comes. Emerging economies are asking a question they never dared ask before. Should we start to de-dollarize? Should we diversify our reserves, our trade settlements, and our financial systems away from the US currency? And this isn't just speculation. The warning signs have been clear for years. Back in 2019, former Bank of England Governor Mark Carney delivered a speech that now feels prophetic. He warned that the global financial system was too dependent on a single national currency, especially one that could be bent by the personal impulses of its president. Carney argued that the world should begin exploring alternatives, a synthetic hegemonic currency, built on global cooperation rather than unilateral power. What once sounded theoretical now feels urgent. Because when American policy becomes unpredictable, the world doesn't just flinch, it starts building exits. The dollar hasn't collapsed, not yet, but something deeper is shifting. A global belief system is starting to fracture. For decades, faith in the US dollar wasn't just economic, it was philosophical. It stood for rule of law, institutional integrity, and steady leadership. Today, that foundation feels less certain. Markets are no longer just watching numbers. They're watching behavior. They're reading tone. They're asking if America still wants the role it once claimed without question. The world is slowly hedging against the possibility that the United States may no longer be the anchor it once was. And the scariest part? That shift is happening not because of war or defeat, but by choice. So the question isn't, will the dollar fall? What happens if the world stops believing in it, and no one in America notices until it's too late? Drop a comment for more breaking news.